Hey everyone, welcome back to another episode of Fear-Free Passive Investing. My name is Lucas Miller. I'm host of this show, and I'm thrilled to have you here today. We have an awesome guest who just had some really good answers, ones that I actually really resonated with, and I really enjoyed it. I'm excited to jump into talking about his very first passive investment that he actually just got done doing earlier in the year. But first, I want to take a moment and just say thank you to everyone. This show is really growing, and a lot of it is because you all are continuing to share the show with folks that you think would be interested in this. I understand that sometimes it is just is it not at the front of your mind when you are listening to a podcast. But if you know somebody who is maybe interested in real estate investing, but they just keep saying like maybe they don't have time, or they're super busy, or maybe they make a ton of money, but they just don't have time to actually invest money. That's the whole purpose of this show, is to help busy professionals navigate the world of passive commercial real estate investing. So please continue to share this show. Just take a screenshot of it real quick, text it to a friend, and I'm sure they would appreciate it. And I know I will for sure. So with that, let's jump into the show. With a quick caveat, I did have some video problems during this interview. It's not, I don't think it messed with the audio, but it might have. I'm not really sure. But the video definitely stutters around. So if you're watching on YouTube, just don't expect a whole lot of production value out of that. But hopefully the audio is good. Now, Daniel actually currently lives and has lived in Japan for the last 14 years. He is a university professor. And so he's actually been investing in real estate since about 2014. And he does a lot of single family stuff right now. He's got like 9 single family homes and a 12-plex and then 16 duplexes that he's owned with partners. But we're going to talk today mostly about his most recent syndication investment, a 48-unit apartment building in El Paso, Texas. So I'm really thrilled to have Daniel on the show all the way from Japan, which is really cool. So with that, let's jump in and start talking to Daniel. All right, Daniel, thanks for joining me. I really appreciate it.
Thank you. Thanks for having me.
Yeah, great. So you and I met on Facebook. I kind of put out the call to anybody who's passively invested in deals, looking for guests. And so I forget if someone mentioned you, but you clearly have experience with this. But for my listeners who might not know you, could you just take maybe 30 seconds or a minute or something and share your background, what you're doing, because it's really interesting, and then how you came to passively invest?
Yeah, so I'm actually a university professor in Japan. I've been here about 13 years, and so that's my day job. And then about 5 or 6 years ago, I began investing in real estate actively, and I started with single family houses. I maxed out all the conventional loans, and then I got a couple of partners that I met through Bigger Pockets. They were also connected to Japan, but we're all married to Japanese women, so we had that connection, and our first deal was 19 duplexes that we bought as a portfolio. Wow. It wasn't what we were looking to buy. We were just trying to buy a fourplex, and it just came across our desk. And then the year after that, we bought a 12-plex together with some other investors. And I think that's kind of what took me to passive investing, because I realized that I love looking at markets, I love finding deals, but I didn't like the day-to-day of managing, a bigger portfolio, and especially managing other people's money and expectations. So I didn't want to go the syndication route. My partners are kind of going that way. And so instead, I went into a passive deal, and I did my first one this year, which was a 48-unit in El Paso. With a couple of guys I met out in Hawaii when I was there for work.
That's crazy. So you bought 19 duplexes. Now, was that as your first deal, or was that like a couple later?
No, that was my first deal with partners. I'd already had 9 single families of my own. They actually count my Japanese house as one of the conventional loans, which is very strange. That filled up my 10 slots. And then the first deal I did with partners was 19 duplexes. Yeah.
Wow, that's crazy. That's really interesting. So you were almost passively investing while actively investing, right? You can't do that. I mean, you were obviously abroad, so you weren't day to day doing it. You weren't changing the toilets yourself,
Yeah.
but it still was too much, right? So let's talk
Mhm.
about that. You didn't like handling investor money. You didn't like doing the day to day stuff. What didn't you like about that?
Um, I think the big thing was, especially with our duplex portfolio, it was a very distressed portfolio, and we thought, like a lot of investors, I think that we had about a year where we were going to do the value add, and we're going to turn it around, and it didn't turn out that way. We've had it for 2 years now. We have 16 of those duplexes now. One of them burned down. The
Whoa.
other ones are sold, and I think we're going to do very well with it. But it was stressful, and there was a lot of we had weekly calls. We had to deal with a lot of different aspects of. There was a property manager on site that had worked there since he was 15 years old, which is
Wow.
amazing. He'd been managing these 100-year-old duplexes for like 40 years. And we just had so many sort of staff and issues, and just issues with the properties and the tenants, that I thought to myself, like, I'd rather somebody was doing this on a day-to-day basis, especially with the time difference.
Yeah. Yeah. I can imagine that time. What time is it there right now?
So we're 10 a.m. on Friday.
Okay, so we are 7 p.m. on Thursday. So that's
Yeah.
cool. Yeah, that's interesting. So let's switch gears and start talking about the 48 unit, the
Mhm.
first syndication you got into. How did you get comfortable with the idea of passively investing?
Well, I think, like you said before, I was always a little bit passive because I was investing from a distance. So from the beginning, I had to hand over a lot of controls to property managers or other boots on the ground. So that really helped me. And I, of course, had a bit, 5 to 6 years of background before I went into the passive deal. But specifically with these guys, I actually met them more. It was actually through work. One of the main, the general partners is a teacher, and I met up with him and interviewed him about his use of technology in the classroom.
Oh,
And
cool.
so there, it sort of was a very organic relationship. And then he mentioned he was doing syndication, and so I think that was one of the big things with this group specifically, that made me really comfortable.
Interesting. Okay, so uh, he's a full-time teacher, and you just felt comfortable, and passively investing just already was kind of in your blood because of what you were doing. I mean, I can
Yeah.
imagine that passivity kind of it's forced upon you when you're that far away. So that makes sense. How did you get comfortable with him as the sponsor, or maybe just the lead sponsors? Was it just a gut feeling? Did you do a lot of vetting? Did you interview multiple sponsors? Talk us through that.
Yeah, well, I'm pretty active sort of socially, on like the Bigger Pockets and Bigger Pockets Facebook group. So I often meet people who are syndicating or they're passively invested, and I try to talk to at least one person a week.
Wow.
So I had some background of different sponsors and different people, like that. But in this case, so yeah, I'd met Duke, who I was talking about, and he actually runs a weekly meeting in Honolulu, and I was in Honolulu quite a lot last year for business. I had conferences and things like that. So I went to one of his one of his meetings, and part of that meeting was they were introducing what they had already done as a partnership, and this was actually their first syndication.
Hmm.
And a couple of things that I really liked about them is, first of all, they knew what they didn't know. They knew that they were kind of newer syndicators. So one of the guys was actually being mentored by, I think, one of Jake and Gino's crew.
Right.
They were going through that, so everything was getting double checked. And they had a lot of active deals before this. The other guys in the group were actually active military. One of
Okay.
them, I think, does logistics. So it seemed like they knew what they were doing. They had a plan for everything. And I think the big thing that really carried me over was right before I was about to invest my money, COVID-19 situation hit. And I was thinking, maybe I should just pull out of this. I don't know how it is. But almost immediately, they came back and they had a plan for it. They reran all of their numbers much more conservatively. They went through pressure testing of all the models. Like, what happens if nobody pays for the next year? What are we going to
Mm-hmm.
do? I mean, it was amazing how they
Wow.
laid it out, especially for newer syndicators. And I immediately thought of myself because I thought if I was in their position, I don't know if I would have been able to handle it so well. And so I just thought, yeah, I'll definitely pull the trigger on this with these guys. And it was for a smaller amount as well.
Yeah, that it seems like they've kind of, you know, showed some forward thinking there and really kind of offered that before people started asking, which I think is really smart.
Mhm.
It seems like they've got some good foresight into that. You talked just briefly at the very end there that it was a smaller amount. Well, how much did you end up investing, if you don't mind me asking, or what was
Oh,
the
no.
minimum? I guess is a good question.
Yeah, so it was a $25,000 minimum. So yeah, I felt, at this point in my investing, that's a smaller portion of my
Sure.
portfolio. So as a first deal, I felt really comfortable doing that. And especially from some of the other syndicators that I had talked to, of course, even on the first deal, you have to put quite a considerable amount of money down. And working with someone new made me feel a little bit uncomfortable. So that
Hmm.
amount was important for me, I think.
Yeah, I think anywhere between, I think the industry average for syndications and multifamily value add is probably somewhere around 50,000.
Hmm.
But 25,000 is pretty normal too. 100,000, somewhere around there for
Yeah.
those who are listening who might not have done it yet. 25 to 100 is probably a good bet. Um, so talk us through the deal. What did you like about the deal? What did you not like about the deal? Did you even look at the deal? Some people don't.
Yeah.
Take us through that.
Yeah. So again, these guys were really proactive from the beginning, and even now, we get a monthly YouTube video that runs through
Cool.
exactly what's going on in the deal, from the financials, pictures of all the renovations that are taking place, any issues they're having, and I think that's a big thing. They really tell us when there's issues too. They seem very honest about when there's something coming up. So they did that from the beginning. I can't remember, but we ended up with 48 units, but there was actually more units to be bought. There was another building, so I think it was something like 60 units.
Oh,
But
interesting.
they, in the end, yeah, in the end, they decided no, we're not gonna do that. We'll keep with the 48, and they explained why they did that. They went over a market analysis. That was also really important for me because I'm
Sure.
a big fan of Neil Bawa. Do you know Neil
Hmm.
Bawa?
Yeah.
Yeah, so I that was one of the big things I connected with Duke in the beginning because I was talking to him about how he analyzes markets, and it was very similar to what I do. So they were able to provide that information about El Paso, Texas, and why it was a good market, and why even down to the neighborhood level, this was going to be a good investment.
That's cool. I don't know much about El Paso, but I assume
Hmm.
it's doing very well, like the rest, like a lot of Texas. I shouldn't say all of Texas, but
Yeah.
yeah, it sounds like a great deal, and it sounds like you have some good sponsors lined up to help spearhead that. What's some advice that you could give to listeners as someone who has just kind of crossed that threshold onto their first investment? How can other people choose people that could that sponsors that are that trustworthy, that are that forward thinking? What's some advice for them?
Yeah, I mean, I think first of all, networking is key. And if I can do it from Japan, I think, people can probably, if you're in the States, it's very easy to find sponsors.
Yeah.
And one good thing right now is because a lot of the meetups have gone online, you actually have the opportunity to jump in on meetups in cities that you're interested in. so I think that's one of the most important things. And the other thing is that I like to get to know the sponsor a little bit more as a person and not just the deal. I'm not saying you have to be best friends, but it's good to know a little bit more about them. Like, for
Mhm.
example, I found out with Duke that he actually, he has a certain amount of money that he's looking to make for himself and his family. But beyond that, he has, philanthropy goals that he's trying to accomplish.
Sure.
His family's from Vietnam, and he wants to do some things like that. So I was able to kind of connect with him on that level and find out what he was looking for. And then what I mentioned earlier, I think is really important too. When I ask questions about the negatives of a deal or the market or mistakes they've made, everybody on that team has been really honest about those. They don't just try to sell me, use it as a sales strategy. They tell me what mistakes they've made or what issues they might have, and I really thought that was a good idea.
That's interesting. Yeah, I think having goals that are attainable and financial goals are really important as a sponsorship team. But like you said, having the passive investor getting to know the sponsors on a personal level is almost more important than the deal itself, because
Hmm.
when things go wrong, and things go wrong on every deal,
Yeah.
that's how it goes. Like, you're trying to run a multi-million-dollar business, things are going to go wrong here and there, and whether they have the ethics to inform their investors about it, the wherewithal to be able to navigate that situation, and frankly, the credibility to actually get the job done, all of that comes from them as a person. That has
Hmm.
nothing to do with the underwriting. It has nothing to do with the management team. It's all about the people that are actually running the deal. So I think that's a really good answer to that question. Are there any resources, like maybe books or podcasts, that helped you get over your fear of passive investing? I know you talked about Bigger Pockets, the Facebook group,
Hmm.
and networking and meetups. Is there anything else that helped you get over that?
Yeah, I actually want to make sure I said the right one, so I wrote down some that I like. But there's a new Bigger Pockets book, The Hands Off Investor. I don't know if
Oh,
you've
cool.
seen that, by Brian Burke, and I
Oh,
just
yeah.
started it. Yeah, and it's really good. So I mean, I'm definitely going to be applying that in the future when I look for more deals. Also, the guys that I'm investing with just launched a podcast, which I think is really good. Kind of takes you step by step through the process. That's called the Cash Flow Project. They're a Tri-City equity group, and then I have one other that I think maybe your listeners haven't heard of. At least I think not. But the Real Estate Crowdfunding Review. Have you ever taken a look at that?
Yeah, by Ian. I have talked to him
Yeah.
before. I can't remember his last name. You Polito
Yeah, he has a
or.
little bit difficult last name. I mean, it's not just about crowdfunding. He talks about
Hmm.
syndication and whatnot. But what I liked is some of his posts. This is a blog, and it's got some really good information about strategy and how to select investments and how to diversify investments in the future. So,
Yeah.
yeah, so I found that really helpful.
Yeah, three great resources. So, of course, we have had Brian Burke on the podcast before. He's a wonderful resource. He's been doing this for a little while now. And so I definitely will check out that book. And, new podcasts are always good. This podcast was started, well over a year ago now, but it was started just because I wanted to have questions answered by passive investors.
Yeah.
It was as simple as that. I wanted to basically crowdsource my passive investing education, and so that was really helpful. So I'm glad to see other people starting podcasts. I think it's great. But if you, just to wrap up here, if you
Mhm.
had to give somebody advice, and maybe they were on the fence about passively investing, maybe they're trying to passively invest or actively invest, like you were trying to toe that line, what kind of investing advice would you give them to help jump over the barrier of giving up control and passively investing?
I think that you have to start, of course, with a little bit of education. You have to know what you're talking about. But really, I find the networking is the best way to go. A lot of people are looking for mentors, and that's kind of a big job. But just if you have contacts of people that have gone before you and they've done
Mhm.
passive investments. And if you develop a relationship with those people and you can trust them, I think you're going to get the best advice, and that's probably what's going to help you move forward with it more than anything else. Because
Yeah.
I know so many people that can just analyze deals over and over and over and again and never actually pull the trigger. So,
Mhm.
if you need to find a model of somebody that's doing what you want to do and just follow that.
Yeah, great advice. I mean, truly great. That was the other aspect of starting this podcast, is literally putting a face to people who have passively invested before and putting their names out there, because, most of our guests are fine answering questions for other people that might have questions about passively investing. And hopefully you're the same. And so literally putting a face to it. Even right now, my video is messed up. I don't know what's going on, but but
Yeah, you're
most
frozen.
people can log into YouTube and search for Fear Free Passive Investing and see people and literally hear from them what it's like to passively invest. So I think that's a great answer to that question. And I I couldn't have put it better myself. So thanks so much. If
Thanks.
people do have questions, would you be willing to answer them? And if so, how can people get in touch with you?
Yeah, definitely interested. I'm probably most active on Facebook, and I'm in the Facebook Bigger Pockets Money group and also the
Yeah.
real estate group. Um, you can look me up there. I can also give an email that I usually use for real estate related questions, and that's Daniel M gpcm@gmail.com.
Cool. Yeah, both of those will be in the show notes at the bottom or at fearfreepassive.com. I can't say how great it was to have you on, especially all the way from Japan. I think this is great. Thank you so
Thanks.
much for, making time, and I really appreciate it.
No problem. I had a great time. Thanks.
Awesome. Well, thanks.